Tonight we're talking about the two roads to recovery from a nasty sell-off. You can take the value approach, and I gave you Air Castle for that, AYR, or you can take the momentum approach, value, momentum. I always like to start with lists. I told you how to play a recovery like a value investor. We started with the new low list. If you play it like a momentum investor, and remember, you have to decide which you are. I can't tell you which you are. If you're a momentum investor, I'm going to teach you how to do that. We start with an entirely different list. We start with the new high list. The idea here is that any stock that's hitting a new high right after a big sell-off is a stock with momentum. Stocks don't get to the 52-week high list for no reason. It's the best good housekeeping seal of approval that Wall Street allows. Or, if you want to use a different analogy, it's the winner of Project Runway Wall Street style. I'd be team player.
That was easy.
I've talked about picking off stocks on pullbacks from the new high list before. And the rules are pretty much the same when you're shopping for good momentum plays after recovery. Although you don't need to wait for weakness to pull the trigger. I went through the new high list yesterday, and guess what was on it, and by far and away the best stock on that list? The answer is popular Kramer favorite, EMC. Okay, I know I recommended EMC on July 11th. Remember, at that point I said it was going to be a play on a really hot IPO. VMware! It turned out it was even hotter than predicted. And I also said that EMC was a play on its own great, if more old-fashioned, data storage business. The stock, even though it hit a new high yesterday, has been disappointing to me. It's up less than 3% since the close on July 11th. Of course, been a lot of turmoil in the market since then. And it's really not seen much from VMware's incredible performance, even though EMC owns 87% of the equity of a stock that hit 70 today and has been a rocket ship, VMware. EMC may have more momentum than most, but it's not behaving like we expected. Or is it? Before the VMware IPO, we valued EMC without VMware at $14.66 a share, which was my highball estimate for VMware trading after the IPO. I thought it would go to $48 a share, okay? I thought that VMware would go to $48 and you get 14 bucks. Now, get this. The stock broke through that figure on the first day of trading. It's now 70. EMC's stake in VMware is worth, are you ready? $6 billion more than we expected when we did our piece July 11th. And yet the stock's barely moved. So if we take the per share value of EMC's stake in VMware, back it out at EMC's current price, get this. Now EMC's priced at $9 a share. That's a whole lot less than our $14 valuation. In fact, at that price, once you take out the value of VMware, EMC is trading at only 11 times earnings. I know no other tech stock selling that cheaply. It's a pittance for a company that's expected to deliver at least 15% growth for 5 years. We had Medco Health last night. That's one of the few stocks like EMC that has this kind of visibility. You know my rule of thumb. If a stock's multiple, price to earnings multiple, is lower than its growth rate, and the company is good, then the stock is too cheap and should be bought. Either the street is overly discounting EMC's stake in VMware, or EMC's non-VMware business must stink, right? Wrong! EMC's data storage business, their bread and butter, is doing just fine. If we take my $14.66 for EMC shares ex VMware, which was completely reasonable, even conservative, then this is a $19 stock going to $24.90. 27% move ahead. So why isn't the stock there already? Well, we had a problem here. There were a lot of stupid hedge funds that immediately sold short, bet against VMware, and bought EMC, betting that they're buying the parent, selling the subsidiary, because in some logical way it seems illogical that the sub could be worth so much and the parent not up. Well, the trade didn't work, okay? It just didn't work. So now they're unwinding that trade, and that's putting a lot of downward pressure on EMC stock. I think it's holding it back. When I first recommended EMC off the VMware IPO, I said the perfect analogy was when Cypress Semi, CY, we had TJ Rogers on not that long ago, he's a terrific CEO, when Cypress Semi spun off SunPower, their solar division, under very similar circumstances in November 2005, meaning that SunPower is just so much sexier than Cypress that they felt like they had to put it in, they had to take it public. Now, it's been 9 days since EMC spun off VMware, and EMC is only up by nickels and dimes. Go back to the Cypress Semiconductor, similar blowout IPO with SunPower. You know what, stock was also relatively flat over the same period? The same period after the SunPower IPO. That's to be expected. It's part of the plan. Now, how about now? Let's go fast forward. At this point, Cypress Semi is now 52% higher than before the SunPower IPO nearly 2 years ago. Hey, listen, 52%. And it turned out to be...
That was easy.
To get. After spinning off SunPower, Cypress Semi's business was really undervalued like EMC's, and I think that this is going to happen now that EMC spun off VMware. I mean, look, EMC is a well-known, dependable brand in the data storage business that carries 50% plus gross margins. Very few companies make that much money after they sell product and pay for it. You don't call a stock on the new high list an underperformer, but I expected EMC to be at 2260. VMware closed at 48. Now, VMware closed higher than that, and EMC didn't get to 22. It hasn't been doing as well as we expected. Stock does have genuine momentum, and if it keeps following the Cypress Semi pattern, it might take a little time before it really starts to make you a lot of money. A lot of that time has passed. Obviously, don't buy EMC immediately. Wait to get a pullback. But it will be erased if people buying after hours tomorrow who don't do their homework pile in. If I see the stock trading at 20, then once again I know there'll be a horrible article written about me blaming me for the bump and how the stock performs. And it will be very unfair. And then I'm going to have to be really bummed out for a little while. And then I'm going to come back and have my show and make everybody who made me look bad and change. Anyway. In fact, I picked today's to talk about this stock because EMC's down so badly. Down 39 cents on a basis of 19 is big. It's become an incredible opportunity if you can buy the stock right here, plus or minus about 10 cents. What does that mean? Again, we're going to go through this exercise because the elitist press has decided to pronounce me a joker. Stocks at, even though I've made like a lot of money. Okay, stocks at $19.45. So you put the order and you say, look, I want to buy 200 shares of EMC. My limit is $19.55. Well, Jim, I'm very sorry. The stock opened at 20. Well, good, you pass, okay? That way, the worst that happens if you can't get the price, you take a pass like you had to do with last night's GameStop. Up 10% today. Hey, okay. 5-day waiting period. Then if Wall Street doesn't start salivating over EMC, I think that just, they'll authorize a bigger buyback. EMC's targeted $1 billion worth of buybacks in 2007. They've already spent $878 million. Now they've sold a sizable chunk of VMware. EMC's sitting on $3 billion of cash. And they brought in another $1 billion in free cash flow during the first half of the year. If their stock doesn't move, I can see these guys stepping up and buying more themselves. You want to take the value approach to recovery, go to the new low list. You want momentum, look at the new highs. The bottom line, EMC is just too darn low versus the subsidiary VMware. It's still got momentum. And if it keeps following the Cypress Semi playbook, then we got no reason to worry. And plenty of reasons to buy. Lightning round coming up.